Gold bars do not default on their obligations. They just don't. I'm Simon Mikhailovich. I'm the managing partner of the Bullion Reserve, which is a vehicle for managing private bullion reserves of institutional and high net worth investors outside the financial system. People think that it's something strange. I manage private gold reserves, but we are at an inflection point that only comes every 3 or 4 generations with great changes in the economy in the world and potentially on the eve of a new world order. And so this type of environment is precisely the environment of highly elevated systemic risks, where reserves, which are independent stores of value, become especially relevant for portfolios and for investors. And so, having perceived the potential need for this a number of years ago in the wake of the 2008 crisis, this is something I decided one day would be a relevant strategy. So I started early. Every ounce of gold that exists above ground is owned by somebody. Today's price, it's about $10 trillion worth or something like that. It's not that much, actually, in the scope of financial markets. 50% of it is in jewelry, roughly. About 20% is held by central banks. About 10% is used in industry, and another 20% is owned by investors. Even if tomorrow somebody found massive deposits, to actually develop these deposits to the point where bullion is refined and available in the market, it would take 10 years. So here's an asset with relatively predictable supply. We know exactly how much of it exists. It has a unique molecular structure that cannot be replicated, and plus it has a very strong proven record of offering portfolio diversification, particularly during periods of systemic disruptions, bank failures, payment system failures, catastrophic cyber failures, and things like that. So it's an asset that is inherently independent from the financial system, from the cyber networks, from the counterparties. In the past 30 or 40 years, most of the wealth has migrated to financial instruments that rely on leverage, rely on counterparties. The world has become more interconnected than it ever has been. And of course, everybody thinks that they're not exposed because they are reinsured with each other. So it's like a daisy chain of obligations where no single party thinks they have a lot of exposure because they have laid that exposure to other parties. That is true only so long as everybody can meet their obligations. What we saw in 2008 is that a failure by one party, Lehman in that case, to meet their obligation, and when the time came for them to actually pay on the promises that they have made, they couldn't do it. And that literally collapsed the entire financial system. So what we saw with Lehman Brothers was just a glimmer of the kind of problem that could happen. I mean, think of walking into an airplane that has 2 engines, and all of a sudden realizing that if the right one shuts down, the left one will automatically shut down as well. Now, what good is it having 2 engines if they come on and off at the same time? So what I see right now is I see governments at the highest level of debt ever, the interest on which is at the historic lows at the moment, and the government cannot afford for that interest to go up. I think we're in a very difficult position, and everybody knows it's nothing I'm saying is some sort of news. It's just everybody thinks, yeah, but this has been going on for so long, it'll just keep on going forever. But there's always an end to this road. So if the debts have to be restructured, it means that there are assets that somebody thinks is their savings, pension, that are not worth what they think they're worth, because they are backed by the debt that cannot be repaid in real terms. And that's why central banks hold gold reserves, and that's why they're now increasing their gold reserves, because they see what's coming.